Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com. And these are the market positions for September the 20th, 2011. Now, to get started here, our first trade for today is going to be in the Euro British Pound currency pair in the Forex market. Now, this is a cross pair, so we're going to experience some volatility. The euro, a lot of things going on in the Eurozone right now. So we're going to be looking to capitalize on a short-term move lower here. Now, to identify the key levels on this, we have 87.42, 87.27, and 87.28. In this particular case, we're looking to sell into resistance. We can see the vantage point predicted moving averages. The market is closed below all three of these predicted moving averages, so any move higher in this particular case is going to be used to set shorts. Now, what we want to do is look at our crossovers here a little closer. We can see our short-term crossover has been moving to the upside, excuse me, now starting to turn lower. Our medium-term crossover is still crossing over to the upside, but again, it's also turning lower now also. We can see our long-term crossover from vantage point still pointing down, and of course our triple EMA cross has not completed. Our predicted MACD and predicted TSI are basically running flat, so this still leaves pressure to the downside. Predicted short, medium, and long-term differences also still looking negative. Now, the point of interest here, the predicted short-term difference has hit an overbought condition. We can see that it's moving lower. Now, with this, we're now going to go into our daily report from Vantage Point and try and fine-tune this entry point. You can see our close. We've had 87.85, 87.39, and then 87.15 yesterday. Now, going into this, we're going to look at, again, a potential entry point for today. Now, we're looking at a predicted low of 86.78, predicted high 87.65. So we're going to be looking to set shorts between 87.65, which is our predicted high for the day, and the 18-day predicted moving average from Vantage Point coming in around 87.42. So right around that 87.40 is that's a reasonable area to look to get into a long position. And in this particular case, we are going to see some volatility with the euro. I would put stops probably around the 88.10 area. That's the way I would play this one out. Now, that's our first position. Our second position is going to be back to the dollar yen. Our two trades today are both going to be in the Forex market. We've got a very volatile week this week with the FOMC, with what's going on in the Eurozone. So we want to look for places to kind of limit our trade. I think the equity trades and some of the futures trades this week are going to be very, very choppy. So looking at this, we can see we have a significant amount of support sitting on this dollar yen just above this 76 level. This is somewhat of an intervention play. Rumor has it the Bank of Japan is going to intervene. They're protecting the 76 level. I would probably support that theory because this has been a very, very long time we've been sitting on this level. Now, that's not to say that this level couldn't give way, but the risk to reward is pretty decent here. So we're going to have our stops on this particular trade sitting around the 75.60 level. We're going to be looking to basically play the Vantage Point daily report. Now, before we get into that, let's have a quick look at this daily report and see what we have. Now, since we are strictly pretty much playing this, we have 76.44 and excuse me, and 76.85. We have the neural index down for basically 6 days in a row. This is warning. This alone is a warning sign that we're going to have potentially have a significant move to the upside. When we see things like this, it's the probability in trading is it's going to turn back up. So what I would be looking at is the 76.44 level. I think our target, our intraday target of 40 pips is reasonable because the dollar yen is really only moving about 50 to 70 pips a day. So if we can pick up 40 to 60 pips on this pair, we've basically done our job for the day. So now that's not to say that we don't have the potential to move back up towards potentially the 78, 77.50 level. So your intraday traders, they'll be looking at 76.85. Your medium-term traders, they would target more the 77.30, 77.50 area. Now, looking at this, when we bring this up with the Vantage Point software, we're also going to put the predicted high and predicted low on the chart here so everybody can see this. We can see that the predicted low each day from Vantage Point has not been hit whatsoever. Our predicted low is suggesting a little bit lower. It's staying in the upper band near the predicted high. The predicted high has been quite good. The predicted low, this tells me that Vantage Point's predicting it lower, but it can't get down there. So somebody is protecting those levels. That's how I would perceive this. Now looking at the short-term crossover, of course, is to the downside. Our medium-term crossover is to the downside, as is the long-term. This is clearly a counter-trend position. Now, what I also want to point out, the predicted MACD is running flat. The predicted TSI is trying to cross, but really struggling. So really, we kind of look back to this original signal back here in the beginning of August, where the predicted TSI and the predicted MACD have crossed over the trigger together. The market has basically been staying flat. So as long as it stays flat like this, this is basically just part of a daily return, you know, where we're looking to buy this, make some money, get out. It's not, I wouldn't classify it as a scalp, but I would classify it as basically an intraday trade. So with that said, these are the market positions for September 20th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.